As one of our panelists recently told me, laser focus is super important when you're trying to accomplish something. A theme in today's discussion is actually going to be focus. How should Canada focus when payments are being overhauled on the domestic and global scenes? With me today to talk about that are Laurence Cooke, CEO of nanopay, Nick Catino, who heads up policy and campaigns and regulatory strategy at Wise, and Shaun Smith-Taylor, who runs global solutions at ThetaRay. Welcome, everyone, and thank you for being here.
Thanks for having us.
So my first question is for Laurence. It's easy to think that a payment stops when you tap your card or you send your wire request to the bank and the money goes off, but the payments chain is very long. It transcends Canada's borders. That's why we have an international payments agenda. Before we talk about that, I want to know from you, why do we even care about cross-border payments?
Well, we care about cross-border payments a lot because firstly, from a business point of view, businesses are now all global and even small businesses are global. And interestingly enough, if you're a large business and you're doing a cross-border transaction, it doesn't really matter much about the rate or anything because you leave the funds where you are. Where they are, because you want to get the best tax treatment. But when you are a small business, you need to repatriate the funds as soon as possible because you need the cash flow. The smaller businesses move more money today, and small and large businesses move less. The second reason we really care about cross-border businesses, particularly in a place like Canada, more than 50% of people in Toronto were not born in Canada. Everyone's sending money home, and if you look at this. The poorest people in the world who are economic migrants are paying the most to send money across the world. And that just seems patently unjust.
What are some of the specific frictions, if you had to sum it up in a couple of sentences?
Well, I usually say that the frictions are the expensive, slow, dataless, and you can't track them like you can track a pizza. But much more learned guys came up with the key frictions. So the G20 has an initiative on cross-border payments, and they describe them as fragmented data standards, a lack of interoperability, lack of capabilities in meeting the compliance because there's so much complexity in the different compliance side of things, data protection, the central bank operating hours, which are few and far between when you're trying to move across huge time zones, and legacy technology. They also said that the main challenges were weak competition, long transaction chains, and the funding costs. So if we just take it from the G20, that sounds like a lot of friction. How much friction? Well, the estimates in Canada is the total payment frictions are around $20 billion a year. This is 2% of GDP. It's very material.
Shaun, I want to come over to you. What are some of the things that happen behind the scenes to contribute to these frictions, higher costs, slower movement of money? What is it behind the scenes that makes risk management just a big headache for payment service providers of all sorts?
Yeah, I think Laurence has covered a few of them already, but I think purely from a risk management perspective, one of the biggest headaches is the processes, controls, and systems that the banks use to review payments from a risk perspective. So one of the key things is if a payment stops, then ultimately it's delaying the end customer receiving the value from that payment, right? And I think a lot of regulated institutions still use what I would say is last generation risk management frameworks. So what happens is actually large number of payments are actually stopped because the tools aren't actually fit for purpose. And what then happens is then, a large team of people, and a large team of people equals a high cost for the bank, have to review those payments. And I think, there's better standardization in terms of compliance controls, but has been probably a slow adoption in terms of using or utilizing the latest technology. If you look at other sectors, if you look at fraud as a really, really good example, fraud embraced next generation AI technology years and years and years ago. The AML sector has been really, really slow to react to that. And I think that actually causes friction in the overall chain.
What's the difference between last gen and current gen, and why has the sector been so slow to adopt the latest technology?
It's a complicated question, but I think, you know, the last generation is rules-based architecture. So that's where you'll need, you know, very smart people, don't get me wrong, but you'll need humans to add parameters and rules into a system. Next generational controls are artificial intelligence based. So that's machine learning, whether that be semi-supervised machine learning or unsupervised machine learning. That's the key difference. I think if you went back 5-10 years ago, there was actually an active reluctance for the industry to adopt new technology. And a lot of that was primarily from actually the banks themselves, but also the comfort they were given from the regulatory authorities globally. And that was because it wasn't understood. You know, people think, you know, or they did anyway, they thought artificial intelligence was bad. They didn't understand it. Basically, anything that comes out as an emerging technology is usually only adopted by kind of a very small minority in the industry. But I think that's changed. And I think the really good thing is, you know, if you look at the statements that have come out from the BIS, if you look at the statements that have come out from FATF, they're really prescriptive over transaction monitoring. Rules-based architecture, i.e. a tick box exercise, isn't fit for purpose going forward. And I think that's really, really key, to be perfectly honest, because from a AI perspective, the results are undeniable in terms of the accuracy, the way of making the ecosystem safer, the way of driving down cost, the way of delivering a better service to the end customer, and actually increasing the control framework standards as well. But that's the main areas.
Nick, I want to switch gears to you. I feel like you're feeling lonely and left out. You're active abroad. You're also immersed in the Canadian market. Though the specifics may be a little different when it comes to the domestic agenda, there are frictions here too. That's why Canada is modernizing its payment systems through Payments Canada's modernization initiative. And Canada is also modernizing its legislation. Some people tell me that we can't or shouldn't think beyond our borders until we sort out the mess within our own. My question to you is this: is there merit to that idea, or is the distinction between international and domestic a bit of a false dichotomy?
Cross-border payments are fundamentally Canadian payments, and it's a misnomer to suggest otherwise. International transactions will have either begun or ended in Canada, as Laurence said earlier, especially when you think about the end users that need them, and they're relying fundamentally on Canadian payments infrastructure. There might be some slight differences in the messaging format, but in an increasingly globalized world, the experience isn't all that different for Canadians. It's money going in or out of their account. They deserve and they want access to efficient payments, whether domestic or cross-border. It relies on the same outdated payment systems that need to be modernized. And the reason cross-border payments are sometimes talked about separately is because the experience is even worse. And it's often embarrassingly bad. It can take a week to move money, might cost 6% or more. That's what Statistics Canada found when they looked at the cost of remittances. Sometimes it's that much for small businesses as well. It could require a customer for some banks to go physically to a bank branch or fax a wire in 2021. That's why cross-border payments are often talked about on their own, because the experience remains so painful. But fixing domestic payments, cross-border payments, it's the infrastructure that needs to be fixed. And so for someone that has a need, I don't think we should differentiate payments full of friction are frustrating no matter where they are, domestic or international.
Right. So fixing domestic helps us fix international. Laurence, payments modernization is a thing of many moving parts. Which of the moving parts in Canada's payments modernization initiative do you think will get us the highest returns, both domestically and internationally, as far as the agenda goes?
Yeah, at the top of the agenda has got to be access. Shortly followed by an actual real-time rail, because we're all arguing to try and get access, but there actually isn't even a real-time rail for us to access right now. So we really want both access and a real-time rail. It's extraordinary. If you look across the G20, we are probably the only country in the G20 that doesn't have a real-time rail. We're probably also the only country in the G20 that doesn't have access to real-time rail for non-FIs, which is also extraordinary. Shortly followed by the key elements around open banking. And again, if you refer to the building blocks under the G20 cross-border initiative, they talk about regulatory frameworks under building block 4, and we really don't have those regulatory frameworks today. And that's trying to get alignment of global regulatory frameworks. We don't even have alignment between provinces and federal in Canada. So we've got a long way to go on that. They have improved direct access to payment systems, 10, we don't have that. We don't actually have the payment systems to access, as I also pointed out. In 14, adopt ISO 20022. Canada's reluctantly taking on ISO 2022 only because it's going to be a part of SWIFT payments in the future. And if they don't do it, they won't actually be able to even send a wire. So we really are, the last man standing when it comes to not adopting ISO 2022. The next one is 15, which is harmonization of the API protocols. And that is clearly in the wheelhouse of open banking. And that doesn't exist. In fact, it's just a talk shop at the moment. So a lot of work to do on that file. That's, if we say that a real-time rail is maybe 3 years out and access is probably about the same time, 3 years out, open banking is probably 5 years out if it's on the same sort of time frame as payments have been. And then the last thing is 16, which is proxy registers. And in proxy registers, notably the first version of the real-time rail, which has been massively descoped, will not include the proxy registers.
That was a very comprehensive answer. I was going to ask Nick if you wanted to add anything. Nick, can I ask you the same question? Feel free to duplicate if you have nothing to add.
Yeah, if you look at the report that Laurence is citing, the Financial Stability Board's effort, right there is the key to payments modernization. These are initiatives that the Canadian federal government has already begun, and now it's really important we apply pressure to see it through in full, and not just the basic minimum versions, but if we want to fix payments, cross-border or domestic, these initiatives need to be seen through.
I want to do a bit of a deep dive into some of these initiatives, PayMod, open banking. But before I do, Shaun, one of the issues is that some corridors are underserved because they're deemed medium or high risk. Some non-bank payment service providers that I talk to tell me that they are willing to service these corridors, or they would be, but they don't bother because it would risk ruining their banking relationship. De-risking has been a problem, not just in Canada, but around the world. What exactly is the problem here, and is there a solution?
I think the problem is multifaceted. I think that's the issue. So one of the reasons that NBFIs, PSPs, fintechs have been able to get these relationships has actually been a defensive mechanism from the banks that provide them the accounts, because ultimately the fintechs and the NBFIs are actually showing the way in terms of how customers should be served in kind of a modern climate using modern technology. So I think you've got the competitive angle, which is one thing. I think the other area is fundamentally, banks who, still, unfortunately, hold the control over who, ultimately holds accounts in what country and where we send money. Again, we'll go back to, risk management controls. They have poor risk management controls. The regulators globally have been hitting the banks hard, whether it's for sending money to people they shouldn't send it to or sending in behaviors that the regulator's not comfortable with. They've been fined billions. And the easiest way to do that is just retract from some markets they deem to be higher risk. And risk management has basically become a cost center, right? It's had a number on it. It costs money to service specific routes. I think where this has changed, and I actually think the NBFIs and the fintechs have helped this massively, is there's specific corridors now that the banks are seeing as attractive because they can see that there's money being made through alternative payment schemes that they're not actually involved in. And what that's meant is that, you know, some forward-looking banks have actually started thinking about, well, how can we actually serve these markets? How can we get comfortable within these markets? And the way they've done it is to actually enhance their risk controls. So, you know, when you're looking at a risk appetite of any financial institution, it will ultimately be driven by many, many different metrics. But one of it will be, you know, do the risk function have the processes, system and controls to deal with this level of risk? And the only way that they do that is either through hiring loads of people, which is financially unviable in most markets, or alternatively, they start switching to technology that is smarter, that identifies the risk a lot clearer and makes the corridor safe. And without sounding like a broken record, it's fairly clear to see rules-based architecture doesn't do this because it's not a clever implementation of technology at all, whereas artificial intelligence does. And there's some really, really good examples of, you know, some of the biggest banks in the world are ripping out the rules frameworks that some very large companies have provided for many, many decades, and they're replacing it with AI. And now they're actually allowing themselves and are able to get sign off from the board to either keep relationships that maybe were going to become deemed as too risky to carry on, or alternatively provide accounts to some of the fintechs to go into markets they used to see as higher risk. And I think that's the key thing. And I also think the fact that the fintechs themselves understand technology. I think that's the big difference, right? So actually they're moving towards AI controlled risk frameworks as well. And that then allows the bank to have comfort. So I think it's competition, but also it's then kind of risk management as well.
Right. I want to start the deep dive into some of the domestic initiatives that you guys have talked about. Payments modernization, as we've said, is supposed to help. And when I say payments modernization, I mean not just the modernization of the systems, but modernization of the legislation. So not just the tech, but also the access to the systems. The launch of the new real-time rail in Canada is delayed. Even when it is launched, I don't think it's going to be as data rich as ISO 20022 purists would hope. But for me, it raises an interesting question. And I think a lot of people have had this question. It's about the relative importance of having this new system with the data richness and the functionality versus just giving non-banks access to legacy systems. If you had to live in a world, if you had to pick one world, one in which you had a new system, but you couldn't access it directly, or one where you had a new system, but you couldn't access it directly, which world would you choose? Nick, I want to start with you.
That's a tough hypothetical. I'm an optimist, Alex, as you know. My hope is that payments modernization includes both full functionality and non-bank access. That functionality of a new system with ISO 20022 with a standard that's the same in Canada as in other countries with faster payment systems. That's what's going to help businesses in particular move money from accounts in Canada to the UK or Australia to Canada instantly into their accounts. That standardized messaging formats and information sharing unlocks a lot of innovation, and it means not just real-time payments domestically, but also internationally. I think ultimately, though, if you want to cut costs for Canadian end users so that it doesn't cost, say, the 6% I cited earlier, according to the Statistics Canada study, you need to allow access to the payment system. And I'm hoping that is the new payment system, allowing payment companies to originate and settle payments directly rather than inefficiently relying on bank partners. You're talking about costs that could drop in half if that was possible. And it's not just consumer costs, it's also the increased innovation and competition that comes from not relying on bank partners who are also competitors. And then ultimately enhanced financial stability that comes from the oversight of retail payments. So I'm hoping the answer is both. I'm not trying to shirk your question. It's a hard question, a hypothetical. I think we just need to continue applying pressure so that the answer is both. Modern, fully functional payment system with access for payment service providers.
Thank you, Nick. Laurence, same question to you.
Yeah, I actually want to follow on from something that Nick said, and that's around this innovation and competition theme. And I think the big problem we actually have in our market is that there's no innovation. And there's no innovation and there's no competition because there is no access. So in fact, any access, like Nick says, is better than none. At least we'll start to have a little bit of competition. And the exciting thing about the innovation and the competition is it won't only impact the most innovative companies, that competition will impact everyone. So in fact, the whole industry can benefit when one or two start to lead the way in innovation. So, we've got to get into a cycle where, people are starting to push the boundaries in these different things, which are going to encourage the banks and force the banks to also innovate. And then the banks will actually provide a better service as well, because they're going to have to provide a better service and better rates to be able to keep their clients.
So the reason I asked that question is this. I think, so everyone agrees, I think, that both are important and both need to be done. One of the things seems more likely to happen than the other. My personal view here is that expanded access to payment systems is more likely to happen than the actual building of an RTR. Given a number of things, there are the more practical constraints of building a real-time payment system in Canada, getting all the vendors to coordinate with each other, getting the participants in the first release of the real-time rail to figure out what the real-time rail is, what they need to build to plug into it. All of that delays the delivery of the system. There are also more strategic considerations. There are some stakeholders in the market who don't want an RTR to exist. And I wouldn't be surprised if some of that some of that motivation still exists today and is resulting in the continual delay of the RTR. So my question really is just, let's say payment system access is expanded, but you only get access to legacy systems. There's no RTR. What does that mean for the integration of the domestic and international payments agendas? Nick, Laurence, feel free to take a crack at that. Nick, maybe you can go first.
Sure. So WISE, think of the infrastructure we've built. We've done that by linking domestic payments systems together, and we have multilateral netting, right? And so ultimately, there is an on-us transaction element that does become possible, increasingly so with access to the payment rails. So that just reiterates the conversation we've had about the importance of access, allowing innovation, and then even just building onto rails, even older existing rails, building onto it yourself versus relying on your bank partner. It's hard to innovate. You can only innovate so much as your partner has done. And then just reconciliation concerns that come when, trying to figure out the status of payment files. So access to the payment rails is key, especially for modern cross-border payment companies, which are often linking together different domestic payment systems.
Right. Laurence?
Yeah, so I see a bifurcation in the market here, and I think for big firms like Wise, they already have a central bank account in England, and so with the Bank of England, they can directly clear and settle with all of the other financial institutions. So I think for the larger firms, actually the access is more important than the rail. I think for smaller firms, the rail is more important than the access. And the reason I say that is because they're trying to innovate on something new. They cannot innovate on the legacy constraints. And they also can't push any banks into a corner to say, well, you have to bank us and you have to help us, because they don't have the financial backing, and they don't have the volume of payments that Wise has to be able to fight their corner and really almost force the banks to be more cooperative. So I think for smaller firms, the having a new rail, it doesn't have to be the real-time rail, but a new rail is more important. And I think for larger firms, access is more important because they can do quite a lot of innovation based on legacy systems, as you've already seen with Wise.
One follow-up before I move on, Laurence. What is it about the legacy rails in Canada that makes it hard for the smaller firms to innovate?
Yeah, so there are a couple of things. Firstly, there's a huge amount of built-in cost. Secondly, most of the banks that are prepared to partner with the fintechs are the smaller banks who are not direct clearers, and so that creates an immediate problem because there's a two-stage clearing program. Because you've got to clear with your small bank, and then they've got to clear with a larger bank who's a direct settler, and so that actually delays and worsens the experience for all of the end clients. So if you've got to wait a whole extra day for that clearing and settlement to happen, that's not a great experience. And even if you're a big firm, you might have to take risk because you're going to send the funds before you actually receive them, which is a bit scary. So I think that's the legacy rails are difficult from that perspective. Second thing, they're dataless. So all the legacy rails have no data attached to them. So we can't do a direct pass through in that. The third thing is we're stuck with the legacy rails in not building in any of the AML and KYC into those rails. There's no concept of putting all of that data in it, running some AI against any of that. We can't do that in that legacy system. We just need newer systems to be able to do all of the stuff that Shaun has been talking about. We just don't have a data set that is accessible to run AI against in the legacy rails. So we can only do so much with the legacy rails, but as I said, for big firms, you can probably get away with it for now. For small firms, it's useless.
Thank you. Switching gears to open banking. That's another thing that was mentioned that is underway in Canada. It's looking like the scope of open banking in Canada at first, should it ever happen, is going to be data sharing. Very basic information you can get by logging onto your online banking portal. When we think about the payments agenda, when we think about making risk management better, when we think about making payments more transparent, I wonder what data policymakers could consider including in the scope of open banking to help Canada make progress on the cross-border payments agenda. Shaun, the question goes to you first.
Well, I think as a compliance person at heart, then, as much data as you can provide me, the better. But I think you then have a massive trade-off with kind of the commercial element and whether customers actually use the service in the first place. I think the main area. So I think Canada's got a job on its hands, right? I think we've all discussed that already in terms of the pace that it's moving. I think the blueprint of what good looks like is already out there. I think Canada, because it hasn't implemented ISO yet, or an ISO standard, I think has an opportunity to go a little bit further. I think that one of the biggest pains at the moment for even countries and jurisdictions that have implemented kind of the latest data sharing controls is around the beneficiary. So, institutions understand who the originator of a payment usually is because it's usually their customer. They have loads of due diligence on it. They have loads of data, right? They can look at behavioral traits and all of that great thing. What they don't usually have, though, is they don't have a lot of information on the beneficiary in a transaction, whether that beneficiary holds an account in Canada or alternatively holds an account elsewhere, wherever it may be. So I think there's an opportunity to create a proxy around a beneficiary. Then actually use things like network analysis to actually show exactly what patterns of behavior that beneficiary has. If you look at countries that have done this super simply and super well, you can look at Chile and Peru, right? So they mandate that a piece of identity information, which I think in their world is the tax number, for example, of that person, a tax ID. That has to be put on every single transaction that goes through specific schemes. What that then actually allows the risk management team to do is understand actually the behavior of a non-customer. And if you think of an area where Canada actually could get a bit of a leg up ahead of other countries in terms of its controls, then I think that's a key area that they should really focus on. But I think, as the guys have already said today, I think there's work to be done before you even get to that point. But I think, once the investment and the direction from a data sharing perspective, if that's where open banking is going to come from, focusing on that small element would be a huge advantage for Canada as a payment scheme or for a payment insurance jurisdiction.
Nick, does the current scope of open banking in Canada, as it's being discussed, present any opportunities for making progress on the cross-border payments agenda?
Well, on international payments specifically, I'll tell you something that's not included, and I wish it was, and that's information on rates and fees. So international payments, comparison shopping is pretty minimal. It's hard for consumers to compare costs. It's confusing with exchange rate margins and fees on top, exchange rate margins taken out from the amount being sent. And we've seen in the UK, even with open banking, that information that's provided by financial institutions often does not include rates and fees. And those banks that have included it initially have realized it was getting pulled by third parties, including Wise, which has a price comparison tool on our website. And they've obfuscated those APIs at times to make it impossible to pull that pricing information. So we've called in countries around the world thinking about open banking or putting this in place to include basic pricing information. I think that would enable comparison shopping and drive down prices, because currently consumers can't effectively comparison shop. And I say consumers, it's small businesses and as well. And so hopefully open banking will include publicly available information on terms, rates, and fees. I'm not optimistic it'll be in the initial phases, but it's something we should push on if we hope to bring down the costs of cross-border payments.
What's motivating the desire to exclude this information from any first phase of open banking?
Well, fundamental to the push for open banking is that this is data that belongs to the customer. When you talk about pricing, that's not necessarily something the customer's using at that moment. So it's not really like customer information in my bank account that would be made available. This is probably viewed, in some places as, phase 2, 3, 4, if at all, because it's not the consumer's financial records. So therefore, there's less of an incentive to make that available right away. But it should be part of the conversation for sure.
Laurence, I thought you got really offended for a second and walked away.
I just had to turn the lights back on. Lights on, no one's home.
Is there any opportunity you think we haven't talked about when it comes to the intersection of open banking and the cross-border payments agenda?
Yeah, I think there's a big opportunity in some sort of national ID, and we don't have any digital identity in Canada, and we only have provincial identities, and that's pretty much only a driving license. So if you don't drive, you don't even have one of those. So it's pretty difficult to reconcile all this information from an AML and KYC perspective. There's a bank-owned solution that now Interac has agreed to use. But again, it's the banks looking after the banks, and they haven't given anyone else access to that identity system. So not a great world to be playing in, where whatever you do, you got to go through the banks.
One could infer that the entrepreneurial reaction to the complacency with which we've approached all this stuff domestically and internationally is to circumvent legacy payment systems, banks, and even monetary systems. If we can't fix a broken machine, in other words, let's build a new machine. Think of things like stablecoins. Given how sluggish the progress has been on payments modernization and open banking and all these things that would help, Laurence, do you think there's any hope for these more radical ideas to solve the problems in payments?
Yes, I think there is. We really had one go at that, and it was unsuccessful. Interestingly, what we did is we launched the first stablecoin anywhere in the world. We launched Mintchip. We bought the original technology from the Royal Canadian Mint, and we launched that, and it was extraordinarily successful. We only did two simple things. One was a P2P payment, and the other was a retail payment to start off to test the technology. And it was extraordinarily successful, particularly in the P2P space, mainly because we made it free. But of course, that caused a reprice of Interac e-transfer, which at the time was between $1.50 and $2. So when the banks pushed the panic button and we went to zero, they all got upset about the billions of dollars in lost revenue. So I'm not really sure who got together, but some of the banks got together and got a lawyer, and their lawyer contacted not our lawyers, but our investors' lawyer to say that what they thought we were doing was illegal. So they basically said the stablecoin was illegal. Now, considering we had launched this under the direct supervision of the Bank of Canada, and we were giving them quarterly updates on this first stablecoin, we had assessed this opportunity with the help of our investor, and also with the help of some of the best lawyers in the country to see whether what we were doing is legal, and the consensus was yes. So then our investor asked us to close the platform down, and so we did the obvious thing. We got a whole bunch of lawyers to prove to our investors that what we were doing was legal. And $1 million later, we just said, okay, enough. We used $1 million of our investors' money to argue with their lawyers about whether what we were doing is legal or not. And there was no doubt in our mind. There's no doubt in our lawyers' mind. There's probably no doubt in our investors' mind, but they just didn't want to take on a legal battle with all the banks in Canada. So we had to shut it down. So it had a real impact on the consumer, because now every consumer gets a free e-transfer today. And that's a great example of where innovation in one tiny little space can impact the whole country. So every consumer gets a free e-transfer today. So that's a fantastic result for the end consumer. Not a great result for us or for our tech. But I do think that there's an opportunity to do this. We had the first conversation with the Bank of Canada in August of 2013 with Tiff Macklin to talk about central bank digital currency. And we met with the Fed and the Bank of England in January of 2014. So it's not like this technology is brand new and everyone's too scared to use it. It's a well-trodden path. It's been up and running for many years. It works. We've tested it in the market, and we've used it in many markets in the world. In fact, we use that tech in all of our cross-border payments today, all of our domestic and our cross-border. So we use that underlying platform all the time. So is there an opportunity? Absolutely. And I think if the Bank of Canada doesn't do a stable coin or a central bank digital currency in a short enough time period, and they keep delaying the real-time rail, we should all get together and just build an alternative rail and build it on a stable coin, and we'll take that to market and we will circumvent the entire system. I think the worst case scenario is if we don't do anything and we don't ever have a real-time rail and no one ever gets access and there's no innovation, people come in from the outside and take over our currency. And, I just heard someone on CNBC this morning saying they think there's only going to be 3 currencies in the world. 3 currencies. They said US dollar, CNY, euro. We lost, we would have to move to the US dollar or move to a cryptocurrency.
So monetary sovereignty is a big thing if you follow this news. Whenever I look at what's going on in the US, I see a lot of talk of crypto and stable coins and how to oversee them and new regulation. Nick, if Canada wants to get serious about stable coins or any kind of radically new way to pay, what should we be learning from what's going on in the US right now?
Well, interestingly, the president's working group recently put out a report that said those stablecoin issuers must be depository institutions, bank only. So the US is moving towards a bank-like regulation for all fintechs to ensure heavy regulation, a bit different than a lot of others in the world. That's specific to stablecoin, but I think that's a push related to fintechs as well. And you saw the acting head of the OCC give a speech in recent days that he called synthetic banking bundling, where he said, as we all know, fintech has unbundled payments, deposits, and lending, but now they're, after getting various regulatory licenses, still offering all 3, bundling them back together, but outside the constraints of bank regulations. So the US is actually, I think in some ways, going in a direction to clamp down on this, the fintech sector more broadly from a regulatory perspective, and prevent stablecoin. I think, the fear is that stable coins won't be an innovation led by financial companies. It'll be an innovation led by big tech. And so that's motivating a lot of the US's response right now.
Do you think on net, this type of response is going to be good or bad for solving the problems in payments?
I don't know the answer. Laurence spoke from his experience. I can say at Wise, we haven't seen a clear use case from our product where cryptocurrency or stablecoin can help us move payments faster or cheaper or more efficiently. But something I think any company in the space is watching. These may be future innovations that make that possible, but right now we haven't seen that use case.
Before I move on to the last question, Shaun, do you have anything to add to the discussion about stable coins, crypto, and so on?
I think the only thing to add is that, if Canada doesn't make a move in a direction that other countries are, then it will be left behind, as the other guys have said. And I think the only other thing that could happen is, we were talking about the kind of the sovereignty. We were talking about the stability of the financial system. Ultimately, either not upgrading your existing system to what is just the benchmark at the moment, is not even above the benchmark, or actually looking at alternative payment methods. All it does is actually drive activity underground anyway. So that's then actually making your whole financial regime even more unstable. So I think that's probably the key area that would be a concern for me. The longer it's left, yes, there might only be 3 currencies in a few years' time, but I think the biggest thing is what are people going to use? People don't stop sending money, right? If there's nothing there, they'll use alternative means, and those means may not be very well controlled.
This last question is going to go to everybody. I opened the discussion by talking about focus. Canada has been doing many things, but we've been making very slow progress on all the things we're doing. Focus is very important. If our federal government or domestic industry, could be either, could only do one thing to make payments better domestically and internationally, what would you recommend they do? In other words, what's the low-hanging fruit? Nick, I want to start with you.
Yeah, I wish they would see payments modernization through more broadly, which I often characterize as RTR, instant payments, the payments license that is now seemingly happening. Third, access to the payment rails, and fourth, open banking. So if I could answer payments modernization broadly, that would be ideal. But specifically, I believe the most important of those would be access to the payment rails. This would allow Canadian pay tax to become associate members of Payments Canada, and then once implemented, allowing those companies to originate and settle payments directly. The cost could spiral down and really help cross-border payments become a lot more competitive. It's too expensive right now. People sending and receiving lose a lot of money, multiple percentage points that maybe they wouldn't otherwise lose. So that'll be the biggest thing, is access to the payment rails.
Laurence, if you could choose what we focused on, what is the one thing we should focus on?
Yeah, in the short term, the one thing we should focus on is the CP Act amendments. If we get the CP Act amendments done, then we get that membership of PayCan, and at least we got a seat at the table.
Shaun, same question.
I think, to make payments safer and quicker, then it's fairly clear what they need to do. So I think, all of the good things that we've discussed today in terms of making the data more enriched, go to a more standardized format, but utilizing the next generation technology is key here, because there are undeniable advantages, which mean, payments won't get stopped unnecessarily. You won't be asked for information from your bank for, quite frankly, no reason. And the payments actually will become a more streamlined process. And that's really, as an end consumer, cost is a consideration, but I think one of the things is, the expectation now, especially with the modern generation, is things happen now and they happen quickly, whether that payment is domestic or international. And regardless of what you do from a, say, a payment scheme perspective, from a technology perspective on the rails, that can make the message, so the message going from here to here quicker, you can make the funding quicker. But ultimately, if the control systems from a risk management perspective are still in the last century, it doesn't matter what you do, quite frankly, because you're still going to get 10, 15% of payments that stop unnecessarily for a human to review. So I think Canada's got a huge opportunity to kind of really, really take the lead. And I think, the beneficiary element in terms of creating proxies could really see Canada take a bit of a leap forward in terms of the stability from a criminality perspective.
I love when we can end on an optimistic note. That's all the time we have for today. To everyone watching, make sure you follow Nick, Laurence, and Shaun on whatever social media they use, Twitter, LinkedIn. Also, make sure to check out the great things their companies are doing. If you don't already know, Nick, Laurence, Shaun, thanks again for taking the time to share your knowledge with us today.
Thanks,
Thank
Alex.
you
Very much.